Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, following the most aggressive year of monetary tightening that we have seen since 1980,
It's been a while.
and a banking crisis, money is definitely in motion. We are seeing bank deposits move to money market funds and even treasury bonds because they're paying decent yields right now, aren't they?
Yeah, Steve. I mean, 4 to 5% yields on money market funds or short-term treasuries are attractive for our cash positions. And with money awake and moving around, people are once again starting to ask questions about protection. How are their funds protected? They're asking questions about FDIC insurance, SIPC coverage, which we went over in last week's video. But another question we're getting is, what about money market funds, like Schwab's money market funds held in your brokerage account at
Schwab.
How safe are those funds if Schwab gets in trouble?
Yeah, talking about Schwab specifically, remember, Schwab is a broker, not just a bank.
Mm-hmm.
People forgot that the last couple weeks, I think, according to their stock.
Yeah.
Meaning your investments, you're investing in stocks, bonds, mutual funds, ETFs, and they aren't available to loan out, or Schwab just can't do with them what they would like to do.
No, not the same as a bank. So you're telling me, Steve, is funds in your brokerage account are yours and you get to decide how they're invested?
Absolutely.
Yeah. Okay. But if you have a Schwab account and you invest in a Schwab money market fund, for example, people sometimes get confused about who actually controls the investments or funds inside the money market. Could Schwab dip into the money market funds if they get in trouble? Well, I mean, I don't want to get too technical here, but if you look at money market funds, it's called the Statement of Additional Information, and you can do this for any fund, by the way. It tells you who's responsible for holding the underlying funds and safeguarding, our assets. For example, if you look at one of the more popular money market funds at Schwab, SWVXX, Schwab Value Advantage Money Market, their Statement of Additional Information, the custodian for that fund is State Street Bank and Trust. So the point here, Steve, is your money market funds, mutual funds, ETFs, etc., hire and pay custodians to keep those assets separate from Schwab or TD. We also use TD for our client assets. And they're not commingled with the broker's assets. The last time I heard that story about your assets being commingled with the brokers,
Bernie Madoff.
So be aware if you see that commingling going on. So
Sounds good, Travis. This has been great. I look forward to it next week.
look forward to it as well.